hand-to-hand battle.
I do think it will be revalued. In fact, I was listening to Luke Groman on Chris Marcus's podcast, and he thought that they would let gold get to a level of higher than most people think possible, $5,000, $6,000, $7,000, and then revalue it to a much, much higher level. And again, supporting my thesis, that would devalue the dollar, which is what they want for exports.
Right.
That would create a bunch of inflation, which is what they want to pay off the $28 trillion in debt that we owe in 3 years, only bringing in $15 trillion in tax revenue. Doesn't work. You're halfway there, which doesn't take into account the $3+ trillion every year in deficit spending between now or then, makes it about 25% of the way there. So they'll inflate, they'll destroy the dollar, they'll devalue the dollar by revaluing gold like Roosevelt did and Nixon did in 72 and 3. And then they'll peg gold to the back end of the treasury market at a much higher level. Every $4,000 increase in the price of gold would give the Treasury general account $1 trillion free and clear.
Which is what Judy Shelton was talking about.
Right, but there's misconception out there. I've heard a couple people say, well, then they would have to sell their gold. The Federal Reserve has claim on the gold. No, they don't. The Federal Reserve has claim on the cash value of the gold. In other words, the Treasury issues those gold certificates to the Fed. The Fed prints the money out of thin air, gives it to the Treasury. And then the Treasury has, if it were at 24,000, as James Rickards was saying, $6 trillion free and clear to start to pay down the debt. They wouldn't even have to issue, as Luke was saying, any debt for a couple of years at this point, long-term debt, just focus on the stablecoin issuance of short-term Treasury debt to fund the operations, start to work down the back end of the debt. See, the whole point is this: how can you get people to buy our Treasury debt when we are inflating away the currency, when we are, as Trump is trying to do, create money and start to put it back into the United States? So create money. You can't do that as the World Reserve, to print your own money, to build your infrastructure, to compete with the rest of the world in manufacturing. Why would they buy your treasuries? They won't. And astutely, as he said, as we've talked about Triffin's dilemma, China doesn't want to be the World Reserve either, because they'll hollow out their manufacturing base. So the question is, how do you bring back your manufacturing in an environment with high interest rates? You can't. You'll blow everything up and it won't work. But what if you have zero borrowing costs with gold pegged to the redeemability of the long end, starting at 50-year, then 30-year, then 20-year? The front end is being fulfilled tremendously by stablecoin issuance and other people like money markets buying the short term. But the back end doesn't need China and Japan and Saudi Arabia anymore, because they aren't buying anymore. In fact, they're selling. So you peg it to gold, you reinvigorate demand for that asset, but you have borrowing rates at next to zero. In fact, Judy talks about a zero coupon bond deliverable in gold. So at that point, you can now, with zero interest rates, reshore your manufacturing base at very low borrowing costs. The weak dollar makes what they produce that much more attractive. And then you end up having a chance for your children and your grandchildren, growing our way out of this problem. The only way you stifle inflation without, in this case, blowing everything up by raising rates, and you can't raise rates too high or the whole system blows up. Stocks, bonds, real estate, the banks, the insurance companies. So instead, you peg it to gold. And you have low interest rates, you bring your manufacturing home, and over time you grow your way out. It might just work. So yes, I do think they are going to revalue gold. The question is, do they revalue it slowly or all at once? Do they let it start to, get up way high, $5,000, $6,000, $7,000 and then revalue it? That's how I would do it. That's what Luke said. I mean, I don't know that they need to revalue it before they issue the treasuries, because it would be redeemable on the face value down the road. Right. It's not a number of ounces. Yeah. But I think that's where the drive that they're going to. It's the only way that you can keep interest rates low on borrowing costs and reshore your manufacturing at the same time, and have demand for the treasury. And that's why they did the stablecoin bill, to blow up the front end of the treasury market, to get all of this demand for short-term treasury debt to keep the game going.
Please try answering this, Andy or Kevin. What happens to silver or the gold-silver ratio as soon as gold is revalued?
Silver goes to the moon.
I agree. I don't think that there is certainly there's no definitive, because it hasn't revalued. But I think that silver will absolutely mimic and mirror that revaluation And we've always said gold moves, and as gold takes its breath, silver actually moves much greater and much faster, which is what I think we're seeing now. Gold's taking its break, and I think now is where we start to see silver will make that hop over 40 and beyond, and that's where we're going to start to see
technically it. Silver looks like gold did a year ago,
right,
or so before it took off. There's a 90% correlation throughout all of history in their movements. They don't move in perfect symmetry, but they follow each other like a rubber band. Like if you've ever gone water skiing, and when the boat turns and you kind of get that slack, and then you zoom, you know, you go around the corner really, really hard. That's what silver slingshot looks like, and I would agree.
I will tell you out there also, don't overlook the ratio and the correlation between silver and copper too, because as we've seen, copper has made a massive move. Just fell back right under 6 again. It's right there, but silver and copper do make a very, very good,
because of the industrial. But I think silver to me is becoming far more than industrial. Although it's a valid point. They do move close, but silver to me is becoming strategic. It's needed in so many areas. And if silver were to go to $200, people say, well, won't that kill the industrial demand? No. Silver is what's called inelastic. There is like less than 1/3 of an ounce of silver in here, like way less.
Yeah.
In any component that you talk about, electronics, or just about any component where silver is used in industrial applications, except for military where it's used a lot.
And photovoltaics.
Yeah, photovoltaics, but there's Bix was yelling about this new solar panel that uses less silver, but they said it won't be really manufactured in any quantity until 2040 or 2045.
It's way far off.
But even still, it's used in such small amounts that it is a very small increase in cost to the ultimate. If it's $1,000 cell phone and the price is, if it's 1/3 of an ounce of silver, and silver is $200,
you're still talking about $60.
Yeah, so it doesn't matter, right? So I mean, it does and it doesn't, but no, silver, because it's been held down for so long, I think when it finally goes, it will really, really, really go.
Which is what on the heels of that, Mimi, what would be the recommended ratio to invest gold and silver for the price appreciation over the next 5 years? 80-20, 60-40, and what about platinum?
70-30, 60-40, 80-20, they're all legit. I think you're acknowledging gold's role, and you should. You can be the all-in speculator and say it's a hell of an opportunity, or you can hedge your bet a little bit. I'm okay with any of those numbers. There's no right or wrong answer.
And how do you put platinum into it? How do you throw platinum?
Right now, platinum is behaving wickedly. I mean, if you look at the short positions on COMEX, the largest concentrated short position of any commodity ever traded is silver. Number 2 is platinum. So the banks have been holding platinum down. The supply of platinum predominantly comes from Russia and South Africa. You got BRICS members there. It's broken out. It's up 50%. It's disappearing on the exchange. There's 30% lease rates. Buy some platinum. The U.S. Mint sadly hasn't made any Eagles in 3 years. They're not making any this year. I don't think they're making any next year. So
we still have some if you want them in there.
They're stupid though,
and they are. Well, we actually had a great special on them.
What? What was that?
I don't know. That was like one of your things.
Yeah.
We had a special on them last week. I think we sold quite a number of them. But yeah, I mean, the Platinum Eagle premiums, they are high.
Remember how long I told you to buy Platinum Eagles?
Yeah. Well, we were talking about it. But I did buy them.
I know, but before that, after you had bought all your gold, the 1 ounce, a half, quarter, tenth, and then the silver and the buffaloes, I said buy some Platinum Eagles.
The buffaloes. Then I did the tenths, quarters, the halves, and I went back to.
That's when you went back. When instead of going back, I said buy platinum.
But I did. That when you told me I bought 10 Platinum Eagles.
Well, the premium on Platinum Eagles industry wide is north of $200.
Yeah, you want to answer this while I find the one that was really important?
Silver in the multi-year deficit. Why is it still available to retail? Because at the higher level, the demand first of all, the demand for silver has outstripped the supply for several years now, going on 5 years. I think somewhere in the neighborhood of 700 or 800 million ounce deficit. The retail demand has been in a slumber. It's why you're seeing an 8-week delivery delay on silver bars in London. It's why you're seeing the lowest float that they've ever had. 155 million ounces, the lowest they've ever had in the history of the exchange since they started keeping records. It will ultimately spill into this market. And I would say that far more often and be far more emphatic about it if people weren't so cynical. Sure, Andy, for that reason right there. Sure, it's in a deficit. I mean, I'm not the one who publishes